Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, the Bless Show, with another video here on Blessed to Invest. And today I want to talk about the current state of the market. What's going on, what to expect in the next coming months, and onward into 2023. Because we're in Q4 of 2022, and there's a lot of things that have happened currently throughout this year that can really prepare us for the next year. So before we get into it, make sure you spam the like button and also sub down below for more content like this to keep updated on what's going on in the markets and get your money right, because we're trying to build long-term wealth on this channel. So this month, October is over. It's the last day right now. I'm recording this. It's Halloween. But this month has been one of the best months in the stock market in all of October's. And the market has gone up significantly. We hit the low of 348. As you can see, this is the S&P 500 right here. And then it just went on a massive tear. It was up 11%. That's crazy. Absolutely crazy how much it was moving during this time. Just from 340 to 3, like that's ridiculous how much this thing was moving. And there's a lot of things that were going on in this month that would make you be like, okay, why is this going up? What's going on here? There was a lot of bad news that came out. There were a lot of poor earnings that came out. A lot of companies are struggling, yet this market is still going up. And it gets to a situation where in a bear market, which we are in currently, you can just take a look at how the chart is performing. We're getting higher, lower highs and lower lows. Every pullback is another low. So this probably will continue that trend, as you can see here, to a new low in the next coming months or so. But in a bear market, what tends to happen, even though there's bad news, the market will tend to cling onto any type of news, any type of positive thing that may come out and be like, okay, this is a reason to go up. And in that, honestly, that's the time to just take your profits, cover if you're trading the short term. And that's really how this market is looking. There's no good news that has came out of this market. And I'm going to get into the news a little bit in a second, but I just want to take a deeper look at the charting, the technical aspect. So we have this 390 level right here. That is a very key level, and we're flirting with that level currently. So from a technical aspect, this is going to be a key trend line, key support and resistance level. As you can see right here, we have all this, and it's tried this level multiple times. It's bounced here 1, 2, it's bounced 3, 4, 5, 6, 7 times around this level. So as you can see here, as it approaches this key level here, this is going to be an area of interest to look at. My prediction is we're going to have some type of pivot on this level just because of how key this level is. When it approaches this level, it may slightly pierce through 390, and then I believe it's going to continue down its downward trend, following the consistent trend of going down. This is on a pure technical standpoint, because you can just see, you follow the trend, how this thing is moving. We're having our lower lows, we're having our lower highs, and it is following this consistent pattern of trending down like so. It's just following this easy, falling into this channel. Right here will be a potential place where this thing could reverse. Also, we do have this level at 410. This could also be another potential reversal spot if it does not, if November tends to have a couple of positive news moments that people want to take advantage of. So if you're looking at this from a trader standpoint, these are the two levels I would look at right here, 390 for potential reversal, and also 410. 400, 410 is going to be some key levels where you can wait to see a potential reversal. And there's going to be a couple of reasons, not just from a technical aspect, why this thing is going to reverse. I want to take a look at the news. Right now, we had the Fed. The Fed is going to be a big issue in this market currently. A lot of things that the Fed are doing, they are consistently raising interest rates. Mortgage rates are now at 7%, about 7.5%. So for the people that are trying to get a mortgage, around this time, you should have bought a house 12 months ago. If that's when you were getting your 2% interest, your 3%, life was good. You might have paid a little bit extra for your house because the house market was crazy last year, and nobody was really able to get a house at market value. They would be paying, 20, 30, $40,000 more. But interest rates were a lot cheaper back then. And with the Fed increasing interest rates, it puts it makes it difficult for investors and businesses to make money in this type of environment. So let's say you have loads of debt. You're a business, your particular business, and you have loads of debt on your balance sheet. Now you're going to be charged more. You're going to be charged the 4%, the 5%, depending on how your creditors want to charge you. You're going to be charged a lot more for your debt, and that makes it more difficult for businesses to run their business because they're not making as much profit anymore. The profit they would be making is now paying off debts. So you can see this in these markets where a lot of these companies are going down because they're struggling. Their products are not selling as well. The profit margin is not as big anymore, and it's a double whammy because one, the consumer is getting hit, and I'm going to look at the consumer in a second. The consumer is getting hit because voila, we have credit cards hitting an all-time high. So the consumer is getting hit, and then the businesses are also getting hit because they are not able to afford the business as much as they used to. The profits are going to be taking a cut. So these are the reasons why this market is going down. These are the negative things you need to look out for. And it's really scary to see, especially this headline right here. Credit card debt is hitting an all-time high, 930 billion. That's crazy. People are not able to afford their bills. As this lady you can see right here, people are struggling. People are struggling to afford their bills. They're looking for second jobs. A lot of people are taking on second jobs currently, and people are resorting to getting credit cards now to pay for their standard expenses, things that they need on a daily basis, their groceries, their food, their cars, and stuff they need on a regular basis. They're now resorting to credit cards, and that is not what you want to see in a market that you think is going to go up. This is a market that's in a recession, that's going to continue to go down, and people are struggling, and we are going to get to a point where this thing is going to continue to trend downward. But we're here to make money. We're here to figure out what we're going to do. We don't want to talk about the negative. Yes, people are going to lose their jobs. Yes, people are going to lose money. Yes, people are struggling out there, but we don't want to be one of those people. We want to be the people making money in this market and doing well. So I want to take a look at a couple of stocks here that are actually doing well in this market right now. Because even though everything is down, you can look at the SPY, you can look at the Dow, you can look at all these standard markets and stuff. There are also a couple of stocks that are doing well. And first and foremost, I want to look at Caterpillar. Caterpillar is a great company. It is a company that builds helps with a lot of building and manufacturing, and they have their machines that they do. So they're bulldozers, and they build those and help construction. So they're doing amazing. If you look at their balance sheet, they're doing a great job on here. I love what this company is doing. I love the CEO. They had a 20% bump during earnings because they're making so much money right now. This is a great company to invest in. If no one has taken a look at Caterpillar, go check this company out. I love this company. I am invested in this company. So I'm putting my money where my mouth is. I've been in this company for a while. I've been dollar cost averaging into this company as it was even going down. I bought up here. I was buying up here, and I've been buying down here. So I'm fully invested in this company. It looks great. I'm super excited for the outlook on this company, and it's doing well. So go check out Caterpillar. Go buy you some Caterpillar. This is not investment advice. This is all entertainment. But I'm just saying I bought Caterpillar, so maybe you want to take a look at that. Next one you want to look at is Pfizer. And Johnson and Johnson. The reason why I want to look at both of these stocks, and we're going to be going back and forth on both of these stocks, these are healthcare companies. These are companies that are going to do well in any type of market, in a recession, in good times and bad times. People are going to need healthcare. People are going to need medicine. People are going to need to go to the hospital or the doctor and have their ailments taken care of. And as you can see, for example, Johnson & Johnson, it doesn't even really look like it's been hit. Let's zoom out a little bit more. It doesn't really look like it's been hit with a recession. Like it looks okay. Like everybody else is struggling. Johnson & Johnson just kind of chugging along. Life is good. They're paying dividends. Like everything's good. It doesn't even look like this chart really is struggling here. Like it hit a little bounce. It's trending upwards. Life is good in Johnson & Johnson. And the same thing in Pfizer. Like it had a little down a little bit here and there, but all in all, this is still a good company on a good trend. They're consistently paying dividends, and I really feel like this company is going to continue to trend upwards in an upwards direction. Like this, healthcare is the place to be when you are in a recession. It's a great place to invest in because it's one of those things that people may get rid of their Netflix account. And let's take a look at Netflix, because they were definitely struggling. People may get rid. Look at this. Look at Netflix. This is painful right here. It was all the way at $700, and now it hit lows of 162, and then now it's trending around 200. But in a recession, people are going to get rid of their leisure. People are going to get rid of things that they don't really need. People are going to stop taking vacations and flights and stop going to movies as often. But when you get to companies that have things that people always need, the groceries, like think of the Walmarts of the world. Look how decently Walmart's trading. It's trading in this channel, and it's not really. It did have a massive drop. I remember this day. This was when the earnings were struggling a little bit, but then it bounced right back. And that's how these companies, these grocery stores, these healthcare companies, these drug and liquor places, things that people need regardless if we're struggling or not, are the things you want to invest into. So I definitely recommend checking out Caterpillar. Great company. They're going to be making a lot of money in this recession. We just had this spending bill that was passed, so things are going to be continuing to get built. Healthcare, the Johnson & Johnson, the Caterpillars of the world. You're really going to want to invest into that. The Walmarts, where people are going to have to buy groceries. They're going to want to be buying groceries at a low cost. So for them to go to Walmart, where they say great value, people are going to be attracted to that. And people are going to want to buy at Walmart. So take a look at those companies for the remainder of the year and onward into 2023. And we're going to be making a lot of money, man. Beginning dollar cost averages in these companies. Don't get nervous. It's going to turn out okay. This is going to be a great market. This is I don't want to say a once in a lifetime opportunity, but this is a once every decade or so opportunity where millionaires are made, and we're going to be making a lot of money. So make sure you hit the like button. Get excited. If you have any other stocks, put them down in the chat below, because we want to be checking out these stocks together, man. We're all trying to make money here. But that's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed. And I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga